So
yeah, so I'm
well,
just
why don't we go to SoFi? Let's see how that position.
so I'm again, I'm team SoFi, make no mistake about it. But at the same time, dude, it's hard to deny what this other company is doing in Nubank. So SoFi made a lot of money for me yesterday. Realized cash finally. So SoFi is trading at 18 bucks. Got an average cost of 7.25. There's 5 open strategies right now. All of the shares are for sale at 20 bucks at the end of the month. You want to talk about that part right there?
Yeah, I mean, are you nervous about that? How are you resolving that?
No. I'll tell you why. Because this damn thing is up. How much in the last month? Yeah, 11 in the last week. 10%, 11%. So what does it got to do to get to 20 bucks? What is that? How many percentage is that? About like another 10, 12%?
12%, pretty much, yeah.
And then I got paid a little bit of money for doing this too, like 25 cents, I think, or so.
You think earnings is going to be a sell the news, essentially?
No, I think that it'll do well. But I also feel like it's a manageable situation, and it's very easy for me to roll these a month and put a $22 handle on there. And then now we got to talk about this thing that's very, very important to me, and that's called valuation. Like people just look at these price targets and they don't take into consideration how many outstanding shares this company has. You got to multiply that, with the outstanding shares, you're going to create this market cap or whatever, right? Going to walk them through that math a bit. What kind of market cap does SoFi have at 20 bucks? What kind of market cap is it going to have at like 22 bucks? Because I could easily roll to 22 bucks. And I'm like, dude, are you really going to be able to justify that kind of market cap right now? We don't know yet. If they announce something crazy with Galileo and stuff, then we're going to feel like, holy shit, this thing's like super undervalued. But I feel like SoFi is maybe slightly undervalued. If you look at the metrics that Chris talks about from Data Driven, I think it's pretty fairly valued right here.
So at 22, SoFi would be a $23 billion company that would be fully profitable. Here's my question for you here. Do you think forget the valuation, do you think the narrative re-rating of the stock could be something that pushes it past your strike?
If the technological component really comes into play. But if you're just going to sit there and pound the table on things that we already know that your lending business is great now, but they have a new wrinkle now where I don't know exactly, maybe you can talk to it more, right? Because I'm I know about these companies generally because I'm not a librarian. That's not what I do. That is not my gift in the stock market. But they're signing business deals with other companies so that they can underwrite using their capital and stuff.
Yeah,
and they have a very profitable business segment now. So I guess that's under maybe financial services. I don't know where that falls under in their flywheel action or whatever you want to call it.
It's what most people are saying their loan platform differentiates them from just being a bank. It becomes a more of a tech company. My thing is just SoFi always pumps and dumps on earnings. I feel like given all the banks crushed, this would be the quarter for them to pump as well. But you're also fair. It's already up a lot in the past month. For it to go up another 12, 15% is just not going to be the easiest thing, potentially.
Yeah, it's tough because, I just look at that. When in doubt, zoom out. It's already up 23.5%. Are we saying it can go up another 23, 24? Yes. But I also have covered calls at 20 bucks. It'd be very manageable at 22, and I could roll and eventually get a $25 handle. I have a very hard time believing that SoFi is going to be able to say anything or do anything on this earnings call to justify like a $25 handle, because that's the level that it would have to go to before I would be like, holy shit, I'm really in trouble with these covered calls. Because if it goes to like 21 or 22, that's a very manageable situation still, just being realistic.
Yeah, and for those that don't know what a covered call is, again, SoFi's TJ is agreeing to sell his 150,000 shares at $20. He got paid a premium from people who bought 1,500 buys, 1,500 calls against those 1,500 shares or 150,000 shares. And if it goes above 20, he either can sell it or he can roll the contract, but he did make quite a bit of premium for putting up those shares for sale.
Correct. And then the other thing that's got me feeling a little bit confident is that I also have now 1,400 long calls. So two things cannot be true. These covered calls cannot continue to be underwater on January the 31st, and these leaps not be printing money for me.
Right.
So if this is going to be a problem, if this is the pain, this is the gain. And that's why I always like to position myself, heads I win, tails you lose. So I'm not that stressed out about it, guys. Like we are okay. And then here recently, I had 1,000 leaps that I had bought very recently on a downgrade of one analyst that, in my opinion, is not very good at this job. I'm not here to talk about people like that, but I mean, his track record speaks for itself. He's lower tier on the analyst, but somehow he was able to move the needle. He was able to move the needle, and I had bought 1,000 leaps for June of 2026 after this downgrade a couple of weeks ago. And I was able to realize a profit of like $194,600 inside of about 20 days on leaps.
That was the KBW downgrade to $7, right? Yeah. That's when SoFi went to 1350, I think.
Yeah. So I loaded up on the leaps, and this dude has really, really made it easy for me because now I locked in some profits along the way, and now I'm just not stressed out about these guys right here. Now, if I had held on to these things, I could have made over $200,000 because I closed these out yesterday. But it was important for me to try to lock in that win because the IV is going to go down after this binary event.
Right.
So it was either gonna be close them out yesterday, close them out today, or potentially even if SoFi does well. And you've been in this situation, Amit. You have been in this situation where you buy a call, the earnings were great, and then wealth coach Mac is like, "Hey, have you heard of this thing called Ivy Crush?" And all of your dreams went up in smoke like a Cheech and Chong movie. What, you remember that? Because I remember that.
I remember that, correct.
You were like sitting here doing all your simulated returns and all this stuff, and this guy gave you a little, Greek knowledge real quickly, and you looked very dispirited.
I was like, Greek? Why are we talking about Poseidon? What the fuck is going on here? Like, where's my money, bro? It's the Greek god for money. Why are we talking about this?
So anyway, bottom line, I think I'm going to be okay. But at the same time, I'm okay with these things getting challenged because I feel like I picked a very manageable strike price on the cover calls at $20. Now, if you're not experienced and if you're of the mindset that, hey, if you sell these cover calls at these levels and you have to deliver the shares at those levels, if that is your mindset and you do not understand that there's a lot of flexibility and malleability when it comes to selling options, then I get it. This wouldn't be for you. But I know that these are not like the stone tablets with the 10 commandments or anything like that. This is a very fluid situation, and I can navigate the waters accordingly because I feel like a $20 strike price, it's almost like come and get the shares. They're right there. I welcome that because, we still got a lot of run up, right? It's 150,000 shares. So the position would be up a couple hundred, $250,000 more.
Yeah. And again, the fluidity that TJ's talking about is that because SoFi is such a liquid options market, if you want to roll the contract, which just means adding time to the contract and getting paid for that, or increasing your strike price and maybe paying a little bit or potentially getting paid for it, that you're not beholden to having to sell those shares at $20, even if that's the value of the contract.
Yeah, and what he's talking about, guys, is the volume right here. You see the open interest is 22,000. The volume is 5,300, and I'm talking about 1,500 contracts. So there's a lot of dance partners there. There's a lot of There's a lot of liquidity. Not going to be losing a lot of money to slippage or anything like that. This is going to be a 1 cent increment. The bid and the ask, the bid will be 20. The ask will be 21, so to speak. So
and this is very important.
Very liquid option.
Yeah, if you try to wheel a stock that doesn't have liquidity, you're not going to be able to generate premiums off of it.
Yeah.
So there has to be a real options market available for the stock. Okay, can we look at Hoodie?
Yeah, real quickly though, Amit, what do you think about me closing out those long calls and locking in the win? Because I did that because of historical reasons, because SoFi has done.
Wait, which exact, all of these long calls or which ones?
No, the 20 ones that I just did, the ones where I locked in the win after the
oh, you're asking my opinion on you getting the profits.
Yeah, so I locked in the profits so that because I have 1,400 more cover call contracts that I could sell right now. I could bring in 6 figures right now on SoFi, and I've thought about doing it, dude. I have thought about doing it. I've thought about literally rolling the dice a little bit because, 6 figures is 6 figures, a lot of money to me too. And I thought about doing it at $21. That's a 22 delta. I have literally 14, or at this case, 1,200 contracts that I could sell.
And but the reason he's able to do this, guys, is because he has the leaps. So the leaps act as collateral.
Right. So there's another $46,000 that I could bring through the door if I wanted to stay at the $20 range, and I do 1,200 contracts. That's $71,000 that I could bring through the door by putting everything for sale, because I'm absolutely convinced that this is a very manageable situation, even if SoFi pumps, and I wanted to pump, because I'm not in a situation based on how the position is structured that I have to cheer against SoFi. See, whenever you're putting all of your eggs in that basket and you're extremely directional, and I've made those mistakes in the past, then it's counterintuitive because you find yourself cheering against the underlying when you sell a covered call. Right. I'm not in this position because I bought the insurance already. So I thought about selling these covered calls and bringing another $50,000, $60,000, $70,000 to the door, because then now that becomes a hedge against the dump, so to speak. Because I'm like, shit, man. First of all, the next round of covered calls is going to suck because SoFi tanked. The IV is gone, so the premiums are going to suck as well. And then what if Chris Patel and everybody else is right? This thing's just going to continue to dump because Galileo doesn't come to the table with anything to justify a hybrid multiple of sorts. I mean, everything's looking very sanguine and everybody's feeling very optimistic. But then you have people that really understand this business at a higher level than I do, like the Chris Patels of the world. And he's like, hey, let's pump the brakes a little bit. Let's pump the brakes a little bit, because this is what historically has happened with this particular stock. And this is why X, Y, and Z.
Okay, so two things. Number one, I think it's good that you took the profits on the $15 calls or the $20 calls, locked in those 6 figures, and not holding them into earnings. So that's good, right? Because earnings volatility, it's good to lock in that win before you get into that earnings. My question to you is, because you're so long SoFi and you want to hold SoFi and you have these calls at such a cheap strike at 5 or 7, what if you just sell them at a very high delta? Like, what if we go to like 25, where it's probably not going to happen, and even though you're not bringing in 40 grand, you're bringing in something, and at least you get something, right? Like, is that worth your time at all, just from a mental perspective? What if SoFi does go nuclear, right? And
sure. Well, I guess just mathematically, it's because I really understand the role, right? And I understand that if I go from 20 to like 23 or 24, add 90 days to the contract, I'll do better than break even on the actual premiums. And now I have all this other capital appreciation that I'm qualified for. I think it's a calculated gamble to try to grab the bag on the premiums initially.
I think that's fair. The one caveat is if that crypto angle does come back to SoFi, I think it takes it to 25.
But I mean, is that a light switch that they can flip on though?
That I don't know.
I'm just saying, like, I think that's where there's investing and then there's speculating, right? Because we're speculating that it is just literally that simple. You cite an executive order. Does that mean that it's all green lighted today, or is there a process? Like, I don't know government that well to understand, okay, cool. The guy's like, here, let me take a picture with my executive order, right? We've all seen those cheesy pictures. And it's like, okay, so what does that really mean? Like, what does that really mean?
I don't know, but I know in 2021 they had it. 2022, they took it away. So they took it away pretty quick. I feel like they could bring it back pretty quick. But I'm just saying the fact that that's out there and that you could be deeply underwater on what amounts to, 300,000 shares.
But am I? I guess that's what I'm saying. I just feel like I don't feel there's a world, crypto or otherwise, Bitcoin moving to 200,000. Show me a world where SoFi should be worth over like $25 a share, because that's where it would have to go to before I would say, hey, these covered calls are now a pain in my ass to manage.
Yeah, but you're thinking about valuation, but this market, I mean, Palantir is not supposed to be valued at 200 billion. Rocket Lab, I don't know if it deserves it to go up 30% in a week, right? Like a lot of wonky
what happened is because he said Mars on the thing. Is that why Rocket Labs is up? Because I have 20,000 shares of this thing at like $4, under $4. It's like 386 or something shit. Crazy. I've never sold a call on it. It's in an account that I don't sell options on because I'm doing experiments with my wealth, right? To see like buy, hold, and hope versus doing all this work, like what ultimately is better in a bull market. And right now, I'm only outperforming that portfolio by 7%. There's like a whole lot of work going on just to make an extra 7%, just so you guys know, because I like to compare apples to apples. And
my thing is SoFi might be getting re-rated. SoFi might be going through what Palantir, Robinhood, and Rocket Lab went through last year. And if that's the case, I don't know. That's just what I'm thinking. It's like, it's kind of scary to have all those shares up for sale, because what if this thing truly does become what everyone's thinking it could become, what you thought it could become for the past couple of years?
So re-rated. So you're telling me that a 152 price to earnings isn't already a pretty lofty valuation?
I mean,
I'm just saying, did people not look at these metrics? Like the people with the big money? I'm not talking about little minnows like you and I. I'm talking, or you and me, whatever's proper English. I'm talking about the people with like the real big money that are these algos. I'm sure you have to program these algos to do certain things. And I don't think it's just to go buy stocks at any levels. I think there's certain metrics that they have to adhere to.
Yeah, but TJ, Rocket Lab doesn't even have a PE. And it's up,
it's
up 800%. You know, like, I'm just saying, maybe SoFi gets re-rated to such an extent, maybe it doesn't. But if it does, and all the shares are up for sale, that's why I'm like, what if you go to 25, 26, you're only going to bring in 10 grand over 70 grand, but it's still 10 grand. And
can you pull this comment up by Jack K? Because that is just not true. 1001. If you have the S&P, let's just say you have the SPY, and you're holding 100 shares, and you successfully sold covered calls against those shares and not had them called away, the premiums you had on top of the capital appreciation are always going to outperform if you know how to navigate covered calls. So that's not true unless you're just an idiot selling covered calls. Because what I do is I sell covered calls and cash secured puts on underlines that I already own. So I'm writing up the capital appreciation, and my cherry on top is always the premium. So I'm always going to outperform you, because the capital appreciation that you're not realizing, by the way, and neither am I, because we're still in the stock, it's there. It's a paper game. But what I have is realized gains along the way, which is my cash secured puts and covered calls. But I'm working a lot. You're chilling. You know what I mean? Like, but this is my job. Selling cash securities and covered calls is my 9 to 5, right? Where other people are able to be engineers, executives, whatever it is that you're doing. So I totally get it. I would say that buy, hold, and hope is an easier way to make money. What I do is a hard way to make an easy living.
So I think you made up your mind. I think you want to put up these contracts for sale.
No, dude, I'm being very disciplined.
No, but here's my point.
I'm being very disciplined, because I think, and what this market does is extremely irrational.
Then why don't you put it up at 20? Why don't you put it up at 25 and at least get something? Because 25 is pretty egregious to you for a run. So why not get at least something?
I put them up at 22 and I couldn't get any takers, bro. Like, I'm close. I'm going to do this. I'm going to try to get these filled at 22. It's just 200 of them. And then we'll do the mid plan. The mid plan is to put them up at like 24 or 25 to where you're like, I don't even have to worry about it.
Or even 26. My point is, like, some premium is better than nothing. If you already made up your mind that you don't want to fight with SoFi getting re-rated,
right?
Why not get a little? I mean, I do that sometimes, where I go really out of the money, and even if it's $100,
it's almost like you're daring the market.
Yeah, it's like I mean, 4 cents is nothing, but still, it's 4 cents.
Yeah, like, well, I'd be like over here. That's a 5 delta, bro. Like, is the juice even worth the squeeze to create that pressure? I mean, let's just see what 500 contracts looks like. See, I'm gonna make like
$3,000 is $3,000, bro.
You can do even worth it, dude? Like, seriously, is it? I mean, I don't know. Let me fuck it. I'll do it.
I know your game is guaranteeing 2 to 3% a month. Yeah, so I get it. But I don't know, on earnings, you just
does feel like it does. I mean, to your point, it does feel like a free $3,000, right? I'm like, dude, like, if SoFi were to go to $25, dude, I mean, I'm jumping for joy over here, because this is like a super, super positive problem to have. Dude, I'm not trying to sound condescending. All I'm saying is because it creates accounting issues and stuff, and you're just like, dude, this is like, there's not a lot of juice in that lemon, but dude, $3,000 is nothing to scoff at for sure. Also, you are emotionally attached to SoFi shares, just like definitely a lot more than any other stock. Yeah, I would say Riot's a close second, and then the one that I'm more attached to than all of those combined is Tesla. Yeah, so you just, even if you can get $3,000, but don't have to get rid of them at 20 and be stuck in a situation. Well, it's not even get rid of them, because I wouldn't get rid of them, but it's, you don't have to manage it, is what you're really saying. That's one of those where I shouldn't even have to look at that thing. Yeah, because the best thing that could happen for your portfolio this year is SoFi pulls a Robinhood, Palantir, Rocket Lab. Facts, this thing's at 20 million. Yeah. Yeah, and that means the paying to get out of the covered calls at that point would be super annoying. I mean, it would be manageable, but annoying. Facts. Absolutely facts. Good stuff, dude. Good stuff. Appreciate you, dude. I feel like I picked up an extra 3,000 that I was not counting. And I wasn't even looking at it that way because I'm like, you're right. It's easy. It's not a lot of money, but it's easy money, and I don't have to look at it. And I have to look at it because I have been looking at this thing. Like, I'm not even gonna lie. I looked at this position over here, the $20 calls yesterday, and this thing doesn't expire for another week, guys. And I looked at this position yesterday probably 5 times, and that's a lot for me,
bro. But see, that means you're losing a little bit of sleep, which is not good.
Yeah, that's literally probably cost me 15 minutes of my life last night. Like, I looked at it, I studied it, I Fibonacci this thing again. You know what I'm saying? Like, I'm like literally like investing time because I was like, shit, I feel like I got caught a little bit here, and it's okay because it's liquid, I can manage it. But I'm like, I'd rather not be in that situation. I'd be more comfortable with the 22 handle right now. Just
yeah.
go.
Yeah.
So good point. I mean, I give you all the full transparency, not just the numbers. I give you the emotions that are tied to these numbers and these moves.